This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in raising funding for your startup? For your next fundraise, consider Tin Capital's Syndicate Platform, an online portal using a special purpose vehicle. The Syndicate Platform allows for online investment and access to over 12,000 accredited investors. Log into the Tin Capital Syndicate Platform to find your next investment. To learn more, go to tincapital.group/SPV. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Ross Darwin, principal at Owl Ventures. Founded in 2014, Owl Ventures is the largest venture capital firm in the world focused on the education technology market with over $1.3 billion in assets under management. Silicon Valley firm was purposely built to partner with and help scale the world's leading education companies across education spectrum, including pre-K to 12, higher education, and future of work. Ross, thank you for joining us.
Hey, Hall. It's great to be on today.
Great. So what was your background before investing in early stage companies?
Yeah, so I'm sort of lucky. I actually grew up doing education consulting. So worked with publishers, with school districts, college and universities, helping them sort of with strategic decisions that they were making. I was at a firm called the Parthenon Group, which did sort of a lot of work with those educational clients. Also happened to do some work for private equity clients who were looking at the education space. And so actually ended up connecting to the private equity or later stage investing side of the world in that way. I was lucky. I worked at a firm called TA Associates and had the opportunity to actually make an investment around the education space, a company called ProCare Software, which actually helps manage a lot of the daycares around the country. And so sort of stayed close to the education world in that way. And so when the opportunity came to work at Owl and work with some of the earlier stage companies and in the education space, I jumped at it.
Great. So what excites you right now?
Yeah, well, so there's a couple of things that are exciting me right now, but one of the things I love about working at Owl is, really we're working at the impact of, or the intersection of both impact and investing. And so the companies I get to work with every day are helping, students in middle school and high school learn math, learn science, learn English. And so I think it just brings sort of a lot of joy, brings me a lot of joy that I get to work with companies in that space. One of the other fun things about working in Edtech is you tend to work with a lot of former teachers, a lot of people who are really passionate about making that impact. And so you end up working with a lot of really nice folks, which is really wonderful. Owl, as you mentioned, works across pre-K, college, university, career, and lifelong learning. And so we really cover a lot of area, but so one of the only sort of true theses we have, if you will, is that outcomes are sort of driving success in education. And so it's interesting in that one of the areas I get to spend a lot of my time is looking at how new technology is actually helping improve learning sort of for those students. And so that's been sort of a big part of what's excited me. The other thing is just sort of being part of the technology ecosystem that is really transforming really rapidly. Education is a huge part of our economy. It's $6 trillion today and sort of expected to grow to be $10 trillion in the next couple of years. Really the second largest part of the economy after healthcare. But unlike most parts of the economy where technology spending is in the 20% of sort of overall spend in that sector, in the tech sector, it's only 3%. And so we expect at Owl, at least, we expect that to really change over the course of the next 10, 20 years and have that technology spend really increase. And so it's really a sector that's transforming pretty quickly, driven in large part by the adoption of high bandwidth internet in schools. And so that's been really exciting for me. The other thing that's sort of been exciting for me is seeing all the areas that education is intersecting with other parts of the economy. And so, we've spent more and more time at Owl looking at even areas like fintech, where you see financial literacy and helping people understand, how to spend money, how to save money, how to invest money, becoming a bigger and bigger part of the conversation in fintech. And similarly in healthcare, teaching people the techniques to cope with anxiety or depression. We're seeing a lot of, really interesting companies around mental health, where education is actually a big part of what they provide to consumers. And so I think it just sort of goes along with that sort of idea that it's a really huge market that's really early relative to a lot of other technology sectors.
Great. Well, you see a lot of startups and a lot of investors in the edtech space. What's your advice for people investing in education companies? What do you tell them to do before they write that check?
Well, so the first thing I'll say is we're super excited to see more folks investing in the space. I think for a long time, it has been sort of an underinvested segment. And the reason for that is it's super complex. Investors tend to like things that are relatively simple because it makes it easier for them to wrap their head around it. We're just super excited to see more people investing in the space. I think it's the first thing that I'll say. The one, hiccup that folks can get into is they can sort of think that they really understand the education space because they were once students. But it's really important to remember just how many stakeholders there are. And it's not just sort of the view you may have had as sort of a student in a classroom. You have teachers, you have the students themselves, but then you also have parents, administrators, and governments who sort of all have different goals and objectives and reasons for sort of their own decisions. And so you really have to balance a lot of different stakeholders. In some ways, we sort of view education as being a little bit like the healthcare segment, where there really is some benefit to being a specialist or spending a decent amount of time around the state or around the sector, because you really do have so many different voices. And so the one piece of advice we sort of give to anybody who's looking at investing in the space is to make sure you spend time talking to teachers, talking to administrators, to really understand sort of how everybody in the system, and to the students themselves, to understand how everybody in the system sort of views whatever it is you're looking at investing in, because there really are a lot of folks around the table.
Great. And then on the other side of that table, what do you tell founders in the edtech world what to do before they go out to raise funding?
Yeah. So, the one thing I'll say is we see a lot of founders who have really wonderful ideas about ways to engage students, new ways of learning, new ways of personalizing that learning. But one of the things that we sometimes see founders, not spend as much time on here is the go-to-market motion. If former teachers, former administrators can have a lot of wonderful ideas about how to sort of increase the quality of education. But to the point we were just talking about, the go-to-market motion can be really hard, and that's true both on sort of a direct-to-consumer side as well as on sort of selling to schools. So from a consumer side, you have the challenge that a lot of at least this is the K-12 and college university side, but many times there are parents involved in that decision as well. If you're going sort of direct-to-consumer, and so you have to deal with sort of threading a needle between attracting parents to a platform, but also attracting students to a platform, which can often be very different messaging that you have to send if you're going direct to consumer. And then when you're looking at the B2B side, one of the big challenges there can be, not only the number of stakeholders, but the fact that there tends to be sort of one big buying cycle every year, right around sort of the start of the new school year. And so, really making sure you have a plan on how you're going to sort of go to market is really something we sort of recommend to any founders who are entering the space.
Well, let's talk about the state of investing in education. How do you see the industry evolving from here?
So we've been really excited by some of the changes in the industry, and I'll talk just about a couple of them here. But one of the big changes that we've seen is a change in access, and this I think is one that a lot of folks will relate to from other industries. But the increased adoption of the internet, sort of increased prevalence globally, has really increased folks' access to great learning materials. And so, just to throw out a couple examples from our portfolio that I think are sort of fall into this access bucket. One interesting one is Preply, which is a language learning marketplace, and allows language learners from anywhere around the globe to connect to language tutors from anywhere else around the globe. And so if I'm a student here in America learning French, I can connect to a language tutor in France who's a French native, but who knows English and who can teach me. Or I can choose to connect to another a language tutor here in the US who's an English native, but has studied French. And so may understand some of the same challenges I'm facing. But you can sort of get that one-on-one attention, whereas before you may have had to try to find a language school. Another fun one in our portfolio that I think is sort of really great in terms of increasing access is a company called Kiddom, which is actually a platform used in over 25% of schools around the country, and is helping students access open educational resources, which are actually curriculums that have been developed by nonprofits, are some of the most effective curriculums out there today. But historically have been sort of in the form of these really challenging to access PDFs, require a lot of paper printing and all of that. And so they're really digitizing that curriculum, adding in sort of more interactive features, including things like tests that are built right into the platform and sort of grade books that are built right into the platform, really making a single platform for teachers. And so really increasing access to some of that great curriculum. In terms of other areas that we spend a lot of our time, personalized learning is really one of the biggest areas. And so this is how can you make learning really sort of individualized for every person who learns at a different level. And so one of the examples I like the best here, and I think is just so interesting, is a company in our portfolio called Newsella that actually takes articles, whether it be about science, social studies, and re-levels those articles to different reading levels. So if you're a teacher and you want to give out an article on a current event, you can make sure that every individual reader in the classroom can read that article at the level of reading comprehension that they have, that still pushes them, but still then allows them to participate in that broader class conversation about whatever that current event may be, whatever that science topic may be. And so you don't sort of leave learners behind in the same way you might have historically. Just to mention one or two other areas, social learning is another thing that we're paying a lot of attention to here. I think there's a really interesting company, Fiveable, that's working on, actually really interesting because they've hired, a large number of actually high school and college interns who sort of really have that in-classroom experience and are talking about how students are using chat platforms today, like Discord, to actually help their learning, setting up study sessions with each other on Discord, to hold each other accountable to their study goals. And so we're spending a lot of time thinking about sort of that social learning space. And then we also spend a lot of time thinking about sort of that data piece and how are these startups using data to sort of better measure outcomes. And so I think, I mentioned at the beginning that, one of the big theses we have is that educational outcomes and sort of the impact that you're able to have really, I think, drives success in the education market. So if you can prove using our platforms, students advance faster, that makes a huge difference in terms of your ability to sell to schools. And so an example of a company in our portfolio that's done that really well is a company called Dreambox, which actually looked at doing double-blind controlled studies to basically prove that students who use their platform to study, math can actually move up grade levels much faster than sort of using traditional curriculums. So those are just sort of a couple of the areas that sort of we're spending time and where we're seeing a ton of evolution in sort of our industry.
Well, we're coming out of COVID and we're dealing with remote versus in-person learning. And so it seems like a big change is coming up in education. What do you think is the biggest change we will actually see in the next 12, 24 months in this space?
I think one of the biggest difference is sort of the biggest differences brought on by COVID is probably that it just made folks, it sort of forced folks to adopt some educational tools. For us, in some ways, it was a real challenge because we've been investing in education technology for years, but all of those technologies were really designed for in-school learning. And so I think one of the misconceptions, probably a lot of parents and teachers had as they sort of started moving online in the past year was they were using these Edtech tools and maybe were confused why they struggled to use them or why why there were so many technical difficulties. And I think part of the answer to that is these were tools designed to be used in schools originally. And so, our portfolio companies and many others were actually really investing over the course of the summer, both years and throughout the school year to basically recreate their platforms in ways that they were never meant to be used. But the flip side of that is teachers who may historically have shied away from using some of these EdTech tools in the classroom now have seen some of the power of those tools. And so I think sort of the biggest change is that you're just going to, there are more teachers who are sort of familiar with the tools and have seen some of the benefits of using them, that we sort of just expect this to lead to a larger acceleration and adoption of many of those tools. And one of the big benefits to teachers as well is, one of the most challenging things about using some of the EdTech tools historically was, sort of teaching the students, how, basically how to get on them, how to, register your accounts, all of those pieces. And sort of luckily all the students really have been forced in the past year to sort of learn those techniques and tools. And so I think what we expect is just sort of much, much broader adoption in the next couple of years.
So what is your investment thesis for this sector? And in particular, what's your criteria for making a go or no-go decision?
So I keep coming back to this because I do think it's a really important thing for any investor in the space to spend time on, is really paying attention to what are those learning outcomes. And so just to give sort of a couple examples of that, in the K-12 space, that may be looking at how does a technology improve student attendance? How does a technology improve student performance on standardized testing? How does a technology improve student mental happiness or well-being? All of those are really important outcomes, but if you can't measure those outcomes, it becomes really hard to convince a school to use their limited funding sort of on that technology. And so one of the biggest things for us is that a company really has spent time, looking at it, looking at and sort of assuring that the technology that they're using is making a difference in the classroom when it's sort of put to that test. Because the classroom is a chaotic and hectic and stressful environment for teachers, and so you really sort of need to be able to prove out sort of those outcomes. The other piece we do sort of really spend time on is that strong go-to-market motion, and sort of making sure that companies have figured out how they're going to sort of scale that offering and scale the go-to-market motion. What we do sometimes come across are really wonderful founders and really wonderful solutions, but where they have to spend so much selling the school district, teaching the teachers, teaching the administrators how to use the product, that it ends up being sort of the unit economics just don't make sense. And when you sort of think about how to take impact and drive it at scale across the entire country, you sort of need to believe that there's a business model there that's sustainable in the long term. And so given the go-to-market challenges in education, we do think it's really important that founders have spent the time on that early on. And so, I think those are sort of the two biggest sort of criteria we use as we sort of assess companies and their sort of readiness for investment.
Great. Can you talk about one or two startups, perhaps portfolio companies that fit that thesis?
Yeah. So maybe I'll mention a couple here. One company I mentioned earlier, Newzella, really was an innovator, I would say, in terms of sort of that go-to-market motion. And so one of the unique go-to-market motions they used is they really offered a freemium product to teachers. So a version of their sort of tiered articles and science articles, social studies articles, but that's free to teachers. But then what they would do is they would find schools where 5, 6, 7 teachers were already using the product, and then go to the school and sell it at a school or district level. And so you had really strong advocates within the school or district already who used the product, but who wanted access to advanced features, like whether it's weekly quizzes or grading or just single sign-on and some of those ease of use pieces that really allow the product to spread throughout the school and move from sort of those innovative first teachers to sort of the full district. But that really simplified their go-to-market motion, because now they're not spending money, reaching out to administrators who haven't heard about them. Instead, they're reaching out to administrators whose teachers are already asking them to pay for the sort of upgraded version. And so I think that's sort of one really great example of sort of that, somebody who's really thought through that go-to-market motion. To sort of talk a little bit on sort of the outcome side, there's a company in our portfolio, Dreambox Learning, which I think I mentioned earlier. When they sort of look at sort of the outcomes of students who use their software, they can actually show that students grow on average 1.9 grade levels in 1 year when they're sort of using Dreambox compared to the standard. And so when you can show that sort of result to an administrator, that it speaks volumes in that sales process. And so I think that's sort of another, sort of really great example on sort of the outcome side. Another really interesting one on sort of the outcome side that fits that thesis is a company in our portfolio called Hazel Health. And what they do is they're actually a telemedicine provider into school districts, helping school nurses who historically may not have had the ability to sort of provide a child with something like Pepto-Bismol or Advil because it's a medication, but by connecting them with real doctors and sort of getting parents permissions in advance, they're actually able to keep students in school, which is one of the biggest indicators of student success in the long run. And so they can actually go to school districts and show really impressive differences in student attendance before and after Hazel is implemented. And in terms of sort of an interesting go-to-market motion, in many states, there's actually financial incentives for schools to keep students in the classroom. So they're actually financially incentivized for student attendance, among other things. And so, in some ways, Hazel's able to show, hey, by adding us, you actually save money. It may be ROI positive for you outside of even just student learning, which is like one of the best outcomes you can show a school. And so I think that's a really another really interesting example of having both that outcomes success as well as go-to-market success.
Yeah, those sound like great examples there. So what do you think is the main challenge startups in the edtech space face today in launching their business?
So one maybe that we haven't touched on yet that I think is worth mentioning is really the challenge of engaging the learner. And so as you sort of think about all the different areas where edtech touches, whether it's teaching students math, teaching them science, English, financial literacy, wellness, one of the biggest challenges all startups face is how do you engage the learner? How do you keep them coming back and make sure they're paying attention? And so, we're always looking for startups that have really sort of, captured folks' attention in sort of a lasting way. And so that's I think one of the biggest challenges in the space.
Great. And then what's the main challenge the investor faces today in the education space?
So, I think we've talked about a lot of them. I think, one of the big ones is that go-to-market motion. And a part of that we haven't even discussed yet is the challenge, at least in the K-12 and college university side. This is maybe less true in sort of the corporate learning side, but of having a single sales cycle. And so when most of those sales are happening over the summer holidays every year, it can be really challenging. It puts a lot of time pressure on a very short window of time. And so not only can that be a challenge for an investor if you're looking at investing in September to then, guess what's going to happen for the rest of the year, but it can also be a challenge because you then have to decide over sort of the off season how many new salespeople to hire, how many new engineers to hire. And that can be really hard when you're not sort of getting the constant data points of month over month sales in a very long off season. And then, maybe one of the other challenges for me, at least, is it's a segment where it's really challenging to say no to the entrepreneur. The entrepreneurs in the edtech sector, which I talked about earlier, are some of the nicest, most caring, impact-driven people out there. And so when you're talking to 30 companies in the space and you have to say no to 29 of them, it can be really challenging. So just a fair warning to anybody out there, but I'd say those are probably the two biggest challenges.
Great. Well, you've talked about a lot of different subsectors in the EdTech space. If you had to pick one that you're really excited about, what do you put at the top of the list?
One of the areas that I'd say, we're spending the most time these days is really lifelong learning. And part of the reason for that is, the sort of concept that you're going to learn everything you learned in the first, call it 25% of your life, and then go on and do things for the next 75%. Is just sort of not how the world is really working anymore. And so, as technology shifts, as the world shifts, it turns out like we have to constantly reinvent ourselves, constantly learn new skills, learn new technologies. And so we think there's a lot of opportunity in helping people throughout their lives sort of continue to build up their skills and build up their knowledge. And so we've invested in both career focused learning, but then even more fun learning like Masterclass is sort of a perfect example of sort of that lifelong learning that's just for fun. So that's an area we spend a lot of time.
Great. Well, the last few minutes that we have here, what else should we cover that we haven't?
Well, the last thing I'll say is I'm just so excited to see more people investing in the education space. And it's an area that is behind a lot of other technology sectors in many ways in terms of adoption, in terms of use of technology. And so for investors, that means there's a lot of opportunity here. And we're just excited to see, not only so many more investors entering the space, but really a lot of wonderful entrepreneurs, I think driven in part by having seen sort of learning loss in their own children during COVID. And so I think it's going to be a really, really exciting 5, 10, 20 years as all of these new entrepreneurs sort of build really long lasting and sustainable companies.
Great. So how best for listeners to get back in touch with you?
Yeah, the best way is probably my email. It's Ross, ROSS @owlvc.com.
Great. We'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks again. Really fun.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.